Hello, good people, and welcome to Spark and Trade. Today is Tuesday, May 16th, and I am happy to have you guys here. I will be doing a really quick trade recap today of the trade that I took in the market. I really am enjoying these installments. If you are, please like, share, and subscribe to the channel. Share with as many people as you can if this is something of value. If you want to join the community, I did drop the Discord link. We are on Twitter. I don't really do the Instagram, although I have in the past, so it's not that I don't want to. I'm trying to get into doing it again. Which I am going to do. So definitely is going to be something where you can watch short clips of the trades that we're taking, probably live as well. But on YouTube, you can definitely catch us doing this live every single day. Drop a question, come into the Discord, ask a question live. It's absolutely free. I'm all about building a community and talking about different strategies that can kind of get all of us to understand the market in a better, more demystified way. I am not a rookie trader. I finally found consistency like last year after about 6 years of trading. First 3 years was rough, but developing an edge that you can kind of trust and the trick to me, I think, was just reducing all of the noise and having something that is really, really simple. I know that sounds cliche, but having something that is really, really simple and you trust because you've done the research of back testing and kind of just saying, all right, look, I have no control, yielding to that very thought, I have no control, but I'm going to execute because the data shows that this should work. And just leaving the rest with the probability. The theory of probability is kind of what you want to get to. So with that being said, I'll give you an example of what that means throughout this trade. I hope you enjoy. Let's get to it. So today, the very first trade I took was a SPY trade, which we'll get to. However, the market showed that it was going crazy for the tech sector. As you can see right here, straight out the open, that 9 o'clock bullish momentum here on Tuesday sent the market into quite the frenzy. Microsoft, Amazon, AMD, Google, Nvidia, Apple, you name it, it was just exploding at 9 o'clock. And that was actually a really great thing for, I guess, people who kind of had this idea that that the tech sector, if the tech sector is bullish, then NQ ideally should be shooting up. And it friggin' did. Straight out the open, NQ comes out and it gives us the boner move to the upside, which was unbelievable. Here is your 130 white candle that initiated the whole thing. I know you've heard me say it tons of times before. If you see white, you expect green. This is the accumulation candle. But really quickly, before we get into that, let's get into the 1 hour supply and demand zones that we drew out. So this was not there. The 1 hour was most likely, supply zone was likely this high here. So around 13,494. Reason for that is because this was the high of the candle of the previous resistance that we could have found. We came back pre-market, came back down, and then the market in the morning we came and exploded into it over here. Actually, this was the morning candle. So this was your 3 o'clock move, came back down, and then we rocketed it up. But that was your 1 hour zone somewhere right there, causing these rejections, and your demand was down there on the 1 hour, but we moved it to here 13,361 because there is a line right here, right? This line here that you just that was supply turn demand. All right, so this is where we expected a bounce from. All these other lines kind of shifted throughout the days, but we do know that there was supply up here and demand somewhere down here, okay? If we get into the 15 minute had, before the market exploded on this condition here, we had supply right here, and we had 15-minute demand down, well, literally right here where the market kind of opened up. So this is your 9 o'clock demand forming, and at 9 o'clock, 9:15, 9:30, we knew that this demand could pop the market to the top side. I totally missed this entire move to the upside. So let's get into it on a more personal detail. And just before we get to that, the reason why I went long on NQ is not only were the entire tech industry, like sectors or stocks, blowing up, but NQ had a bullish condition at the open, all right, 9 o'clock, and then it had a bullish condition for possibly on the 15, and on the 5 it had the bullish possible flip condition happening too. So I didn't take the trade. The trade goes nuts without me. Almost going from here to here is 82 points. Market then comes back from 82 to 61 points, right? Now, if we have a 1 hour, 15-minute bullish condition, then why would I target an entry around here as the market is literally falling down? It was here. I wanted to actually take this entry here. You guys know that in a triple threat, meaning triple bullish threat condition, all the clouds are green, I need to enter at the money zone. Here goes the money zone on the 5-minute chart to the far right. And there was also an opportunity to enter where this circle is, or the circle was, as we were moving down. Okay, that's the green on the 15-minute middle chart. And all the way over here on the far left, the 1 hour was also kind of there, although it shifted due to the up move that came following that drop. Now, as the market was coming down, and I did not take this zone, guys. I wanted to take this zone. Every time I looked at it, I was like, man, I should just take it right here. That would have been a 71 entry, risking 20 points. So if I did that math, my stop would have had to be somewhere right there, literally where they kind of wicked. That's 21 points. So I probably would have got out and been pissed off that I missed the move. However, just to give you an idea of what I have to go through in my head is, I either take this 15-minute zone or I wait for a 15-minute zone or a 1 hour zone, which is a little bit below. So it's just a game of letting the market come to me. And today, I just so happened to choose that I was going to wait for this 15-minute zone. Now, when they got here and the market was still coming down, I say, you know what, I'm going to put my order a little bit below that. So I put it in at 56. Market came down from 61, 60, 59, 58. Boom, it hits me. Still goes down. I'm like, oh, God, this thing is dumping. Boom, stops at 52. Snaps back up. I never saw a drawdown again. And to give you an idea of what that looks like on a 2-minute, we'll go there next. But I never saw a drawdown again entering there. So when you see that entry push you right back into profit, and you're a part of the wick, only things you don't want to see is another candle come take that wick out. You don't want to see another price action come into that zone and not wick out of it. That wick is telling you that someone's buying that level, and that level is of interest, and that person has way more money that those orders are way heavier than what you can do in moving the market, which we never can do as individuals. But there's enough orders there to cause the wicks, which is why you start to feel good about the trade, feel good about the fact that you got in somewhere where the wick occurred, and it should have happened in my head because we're around the 15-minute and 1 hour bounce zone. So market immediately moves up. I set my risk to 20 points. I'm going for at least 20 points to the upside. So just so you guys see what that feels like, here's my entry. It's about 18 points, 19 points to the downside before I get stopped out. I need to go for at least 40 points for a 2R trade. That's somewhere right here, guys, right there for a 2R trade. And I got out right here for 33 points, a little bit shy of it, right? Like just a little bit shy of it, but it matters. That matters. However, as long as you 1R or better, and if you have multiple contracts, scaling out at 1R is not a bad idea, because now you locked in the trade and it's a free trade if you move your stop into up into break even. Now, I didn't do that then. I was ready to basically let them take it all or pay me. However, when I started seeing this flag that happened right here, Did get a little nervous, not too much. Market came back down and then snapped up. Like I said, this level here was pre-existing 1 hour supply. So I'm like, man, I don't want to test this thing. If it doesn't break, I'm going to get the snap down versus the snap up. Well, I was wrong. It snapped up and broke all the way into this supply line, 4515, which was what I was talking about earlier today. I was like, yo, that 4515 is kind of where I want to take this, but I know it seems crazy, but yeah, that's where I want to take it. And we're not that far away. We're about, 25 points away, and on NQ, that's nothing. The thing goes up to 4534 and more throughout the day. So, setting your trades and letting the market come, letting the price action hit target is not a bad idea. That's really important, I think, to new traders. And the only thing that makes it difficult to hold to target is oversizing on a trade. If you're oversized, every single tick is going to be something that feels insane during the trade. But I was okay with letting the market take $40 to make more than 40, right? Like at least 80 to 100, maybe even more. In this case, the market does what I needed it to do. I got out a little too early, and that's why you see that orange there showing you that I didn't let it go all the way to target. But this trade was a solid trade, solid entry, solid reason, nice bounce back up. You had another opportunity to enter right here on a 5-minute pullback for the next swing. Had another opportunity to enter here for the next swing with a 20-point stop. I'm almost 100% sure this doesn't stop you out if you get in at the money zone. 20 points is down here. You are surviving that pullback. Pullback happens, next leg up, you get paid. If you had a target that was outrageous, you probably wouldn't get it, but you definitely made some money on that swing to the upside. A lot of hesitation up here. Now, why would you get out of there? Well, there's something else that's happening. So you guys can see I didn't take these trades, but definitely call them out in the community before the price comes down. I said that this 15-minute supply line right here that's showing on the middle chart, we could probably get rid of this here. So that's your 1 hour. We're going to get rid of that. Move this a little bit, like right here. So this 15-minute supply line that came in, that's literally around this area here. That showed us that the market could potentially come down. So I got in when that thing was somewhere around here, giving it a 20-point stop, I believe. And the market came, barely got us, barely got us, and then it came and paid. However, did not get out. That trade becomes a losing trade because I let them go hit the stop. Even though, once it bounced off the middle of the Bollinger Band, it's a strong probability that the bulls are still in control and you might get another oscillation to the upside. That happened. We get clipped. Trade's done. I'm like, well, wait, there's another 15-minute line coming. Now, this is what I mean about having an edge that you trust. And you kind of just have to, you're a victim of the market no matter what. Now, this trade took 2 hours to pay out. And it was brutal if you were watching it. These two whites were my entries on this trade, right? I ghost traded this in the play account just to basically, I'm always practicing, right? And that's the kind of target down here. This is target, guys. I enter, basically somewhere right here at break even. Market comes, pays me a lot, takes it all back, pays me decent, takes it all back. Pays me now, nice, and I'm like, okay, good. Now we're back to the red, and then this boom happened, and I just took everything I could off the table, leaving only about 3 contracts to the upside. This happens, and I had a stop here. This level was the only thing I was risking. I got stopped out on those 3, and then it, kind of went up. Now I only drew this long because it was a 1 hour kind of reclaim of the money zone, and we are still bullish on the 1 hour and the 15 minutes. So just to give you guys a reference of what that 1 hour looks like, this is your 1 hour bounce right there, right? So 1 hour money zone, which is basically what we took this morning. A triple threat trade, you take it. In this case, it's a double threat, the 15 and the 1 hour. Okay, I hope you guys understand that those two clouds are green, so we're going long at that level. That's where you want to go long at. because structure should be higher and higher, right? And in this case, it was. Market shoots back up. I called it out literally as this stop was getting hit. So you would have made a little bit of points, only for the market to really kick in and do what it was trying to do from this supply level up here that came in on the 1 hour and the 15-minute. Once that was on the 1 hour, I was like, all right, this is a good trade. And the market literally came all the way close to target. Now, this is kind of unrealistic to think you're going to break through demand. So having a target at demand, risking this very little supply, was not a bad trade. And it literally went down there, formed some 15-minute demand, and now we're bouncing up, doing basically the same thing that we done up there. Well, we would have taken this trade somewhere around here. We would have been green, and maybe 1 hour right there. Who knows, depending on our entry. But on the 5-minute, just to give you guys an idea of what that looked like, this was the day. And those were the trades that I would have called out. Even though this is a long here, those were the trades that I would have called out. And you can be on either side of the aisle. You can take this long, that long. All of these are going to be higher time frame money zones since they broke through the 5. Even this one was, even though the conditions were red, the candles were red, just more dangerous than these. And the 2 shorts took forever to come in, but they never stopped us out. This is your stop zone up here. Never stopped us out. Now, these red lines are where I believe the uptrend during that short area up there will snap to the downside. That's when the uptrend will break and cause this probable down move. Now, this thing comes to like the end of the day. Now, none of this even mattered. If it worked or didn't work, it didn't matter. The condition for taking the trade was there. We're at the top. Supply came in on the 15 and 1 hour. We have to take the shorts. So I'm going to always call it out for the group. And if you manage to be a better trader or develop the muscles to hold through all of this, at least you get down here to demand before you exit. Kudos, bro. Now, for me, not watching any of this is what got me to this level. I ended up scaling out right here. Not watching any of this caused that scale out. And the reason for that is because my mind is constantly thinking, okay, where are the enemies? Oh shit, there they go. They're coming back up. Oh man, who cared about them coming back up? This guy slammed them down. It's because it's gonna keep getting slammed down at that level, and you got to kind of trust and believe that that's what your play is about. It seems, right? It just seems that way. Just like the longs back here. It seems like that's where the orders were. If it's going to make a lower low, then I'm fucked. But if not, we get this move to the upside. And then it becomes a execution. Do you hold to target? Or at least crazy close to target? And, or maybe you have another mechanism of once you hit 2 to 2.5x, it starts to trail the price as it goes out, as it scales you out every 5-point drop or 10. That's a very complex trail system, and they have them out there. But anyways, this short plays bang to the downside for a nice from entry 58 points, and going up 35, I think, was it 30 something points? Yeah, 33 points, and coming down 58 points. It's a nice day. So that was my trade recap for today, Tuesday, May 16th, guys. I hope the reasons for all 4 of these trades kind of made some sense to you. We're basically showing these supply and demand levels every day and riding the market into that zone if the condition works, taking a trend money zone trade or taking the possible 15-minute 1 hour reversal trade. That's literally it. And maybe one day I will show you guys my push and flush play. That's the last one in my playbook, but I really don't even take it myself because it's not a C+ setup, but it's not as easy, and it's more of a scalping kind of trade. You're not staying in it for the motion in the ocean, let's just say. But yeah, man, you guys have a great evening/night. I hope to see you guys again tomorrow when we trade. Please like, subscribe, and share. Peace.